Fintech. Fintech is a very broad term, so we need to start by defining what fintech means in the context of Islamic finance. Fintech solutions are new business models that are driven by exponential technologies and that result in a very transformatively different revenue and cost structures. What does that mean? Exponential technologies are 9 types, and they include the likes of AI and machine learning and digital identity and cloud and crowd and so forth. New business models, the examples are the likes of TransferWise in remittance business. They are the likes of the Monzos and the Revolut when it comes to retail banking. They're the likes of CLS Group when it comes to correspondent banking and so forth. And what you notice is they all result in a very markedly different business model, right? That completely change the way the costs are incurred and where revenues and profits accrue from. So it is very important, if you are to stay relevant, it is very important to understand how fintech is impacting business and what needs to be done. Next 15 years is going to be about what we call fintegration. And fintegration means the amalgamation, the embedding of traditional banking formats with fintech solutions. How are they impacting banking business? In a number of different ways, and I'll talk about a few of them. So cost commoditization. Fintech solutions are resulting in cost arbitrage going away. And a classic example of that is a national eKYC systems which are coming to the foray. जिसका मतलब ये है कि not every bank will need to do a KYC for a new customer. Instead, if a customer has a bank account in any of the bank in that particular market, then there will be a national eKYC database, and any bank can pick on that information, and that makes customer experience and customer onboarding a lot more smoother. Within cost commoditization, there are other examples as well, like robotics. And as a result of this automation, what we are saying is the cost to income ratio is going to come down significantly. Similarly, there's a lot of co-sourcing and outsourcing that is happening, and banks are being forced to rethink on what their core business is, focus on those, and for the rest collaborate with other partners. So cost commoditization is one of the implications of fintech solutions out there. The other one is profit redistribution. And what that means is the traditional sources of profits may no longer remain the same. Classic example of that is, as a result of these technologies, a new investment and wealth management solutions that are coming up. Institutions like Wealthfront, Betterment, Nutmeg, they provide a substitute to savings account. Now, savings account, all know, are not earning a lot of returns. And imagine if moving between value chains, deposit banking, where you've got saving in current accounts, versus wealth management, where you've got all these investment and robo-advisory. If moving between these two value chains become a lot easier, a lot smoother, you can imagine the implications for banks. When the consumer moves away from having a savings account and says, why don't I have a wealth management account? I get the same service, and I have a better potential for an upside and returns, right? So similarly, I'll give an example of re-takaful companies or reinsurance companies out there who used to work with insurance providers or takaful providers. But now, with the advent of fintech solution, there are a number of new gen businesses that are coming up. As a result, a number of these re-takaful companies are saying, why do I have to go through these product providers? Why can't I go directly to the end consumer? And that has been made a lot easier as well. Profit redistribution, similarly, I gave the example of TransferWise in the remittance business. Now, they brought down the cost of remittance by 80%. We're not talking 20, we're not talking 8, we are talking about 80%. Now, that is disruption. And they were able to pass on a lot of those benefits to the end consumer while improving their return on investment as well. Now, how do traditional banks compete, when there is a change in terms of cost and profit distribution by 80%, right? So, profit redistribution is another implication of fintech. A third very important one is experience. Customer experience becomes very, very important, and customer experience is being shaped by the likes of Google, Facebook, Amazon, and Apple. And again, customers are asking banks that, if I can get this quality service from other industries, then why not from banks? Why can't you follow my digital footprint? You've got all my data. Why can't you serve me with my next best product, without me asking for it, and so forth. And finally, platforms. Platform banking is going to take off big time. And what really that means is through an API-based system, banks will be able to speak to other players outside of the FS industry. So banks will be able to, for example, align with the likes of Facebook and PayPal and Amazons and Imtiazes of the world, and then say, what, how can we work together to provide an integrated service to consumers? What does that mean? What it means is banks who do not have a middleware strategy, who do not have an API strategy, will be left behind. So given all these technologies, where do we get started? It's about three things. One, it's mindset at the top. It's not about technology, it's about strategy. It's mindset at the top. At the board level, at the senior management level, there has to be a fresh thinking of how do we collaborate with these innovative players. And more innovation is going to come from outside of the bank than from inside. So we've got to understand how the collaborative ecosystem is going to work. Second, is all about, the first was about mindset, the second is about collaboration, and the third is about action. No matter how imperfect a start, but take a small start. Thank you very much.